Hello and welcome to BISP Solutions. So we are going to continue our learning QuickBooks sessions along with US GAAP. So um, before we move forward, Mr. Dawson and Mr. Gabby having a discussion about the fixed assets. So they both are discussing that how to record the fixed assets and how to report the fixed assets, and what are the applications and what are the rules and principles we have to follow while doing the fixed assets. So Mr. Gabby is going to explain about the fixed assets. So here this is okay. So our next topic is the fixed assets and how is it sold, and this. So our next topics of fixed assets. Fixed assets are those when a business is growing. Okay, and for more success of business we need some assets that give more benefits to the business, and that are known as fixed assets. Of course, if we are have to having a success in the business, we have to get the benefits from the assets. Because suppose if we have the computer for doing the all the financials and other workings, and we have vehicle for the delivery purpose. So this kind of fixed assets will help us and get and give benefits to our business. Okay, and fixed assets we can record. Now what how the fixed assets is going to be recorded in the QuickBooks applications, and what are its rules. So we are going to get to know about the IAS as well. So if we see here that IAS 16 property, plant and equipment is applicable. Okay, there is more IAS like investment property as well, but right now we are just focusing on this PP, because this asset is giving us benefits, not we are going for the rental. So this IAS outlines the accounting treatment for most types of PP. PP is initially measured cost, of course, then it is measuring cost or evaluation model, that is going to be later. So this means that when we purchase an assets and recording that assets, we will going to record that assets on the cost basis that we are paying to a vendor. Okay, then it will be measured accordingly as per the rules. Okay, so now there is a two way to record the fixed assets. In fixed assets, Mr. Dawson asked Mr. Gabby how to record the fixed assets. So Mr. Gabby is explaining that to record the fixed assets in the QuickBooks application there are two ways. So the first way is that, so Mr. Gabby goes there and so Mr. Gabby goes in the application, and from the list menu you can see this, the list menu, and from this list menu you will go to the fixed assets item list. Now here you will see there is no fixed asset is being created. Okay, so now how the fixed assets shall be added. Now suppose okay, so just remember this is the first way we are recording, because suppose if we are migrating our business or financial documents into the QuickBooks, we will of course when we are migrating, we can record the fixed assets by this methods. When we purchase the fixed assets and record this method and record that fixed asset is another way. Okay, so now this is the first way. So this way is like this, that you have already having a fixed assets in your existing business. So when you create this item from, you can select the new, and the new item here. Now it asks assets number, name, assets account. Okay, so you will give this window is open up, and as you can see, when we create COA when we create item list, the type of window is come up there. So when because of this fixed assets list, this fixed asset is fixed there. Okay, so you have to give the fixed assets name and number here. Okay, give it that the asset account, of course, which asset account it is going there. So purchase descriptions. Now remember, now what I am saying is that if you are having a balance of a fixed asset, you just not click on new, you should go to the use button and just write the date of the closing balance and write the cost. So as you know, we follow the going concern principle, so it will give a true and fair view of the going concern of the financial statements, and the financial statements principles cannot be broken up here. So this is how you will create a fixed assets if you having a fixed assets already in your books. Okay, so this is how you will create it. Right now I'm not creating this fixed assets because if I have to create this fixed assets, it will get impact on other values. Okay, suppose, okay, leave it, we will create a fixed assets. Suppose we are creating this fixed assets is the table. Okay, what the fixed assets account will go there? Fixed assets account, we don't have fixed assets account, we will create add a new. Okay, we are giving a number, so we have to go and find the view number. Okay, so we will start this 35,000. Okay, and we will give the name to furniture and fixtures. Okay, so we'll click save and close, and we'll give, as you know, we are already used this, but okay, so what we say, the WDV costs. Okay, a date will be, suppose you are migrating from 1st May, right, and the cost is of $3,000. When we click, if you want to give this sales information, I will tell you later in the 2nd way or in the 3rd way. Now suppose you come here and you will give it now, and you come there and you will see this. Okay, and you click OK. Yeah, ignored it all, and now here you can see this, the table number is comes up here. Okay, okay, so this is how you will create the fixed assets in this way if you are having an existing fixed assets. Now you ask me that how we are going to create the fixed assets if we purchase and record. Okay, so now the other way is, second way is to purchase. So now we are going to on a second way. Okay, so let's go on the right check, check. Okay, so we are going to have a right check. We will record this from the right check, from the banking menu on the right check. Okay, now we should select, yeah, we are doing the foreign currency here, we should check the bank to Las Vegas. Okay, okay. So now we are going to buy this assets on 1st Feb 2024. Okay, so what is the amount of this fixed assets is $3,500. Okay, now we have to select a vendor. How we are going to select a vendor? Okay, remember I just click on 3,500 and it will come here. So we have to don't have to select the we have to select the items. Okay, so now you'll click this 3,500 is a balance. You can write it or you can not write it because the amount will come there. You'll just follow the steps. Okay, now we are going to select the vendor. If this vendor is there, you can select it. If the vendor is not there, you should have to select this. So I will add a new vendor, quick vendor. As much as information I will give the list. So I will give this the World Electronics. Okay, as much as less information I should give for better understanding. Okay, and we click on OK. Okay, so now we have to create an item. Suppose if that item fixed assets is available here, you will just select it and continue. If not, then you know that how to add this. You will come up here and write this fixed assets. Now the assets name, what we are purchasing the asset here. Okay, we are purchasing the asset here is HP 15.3 inch laptop. Okay, now the thing is comes up here. Now here is the thing comes, this I told you we are purchasing it, so we will select this item as item list. Okay, item is new. Now here on the asset account, you will have to select the assets. If there is asset is defined to this particular asset name, you can just select it and continue move. So now we will, and I am going to show you how we will create this assets. Okay, so now first we will select this. We will give the name. Now what we give the name, we should change the name so it will not make a confusion here. So now we will give the assets. The assets is HP laptops. We click save and close and we move forward. Now we have, this is the main assets account that it will go. Now we will see this. Now we are going and we will create the cost price. Again here you will able to see that it will create a sub account. Okay, now here you will write the cost price of just the cost price. You should and create the sub account here under the HP. Click save and close. Now you will see why I'm going to doing this, making the sub accounts, because it will give you more clearly about the cost price, that is the list price, and the depreciation of that particular assets. Okay, so that's why we are doing this. Again we will create, here you can see it is available here. Again we will create new, and what other thing we are going to create is that the accumulated depreciation account. Okay, again we will just give the sub account of to the HP laptop, and we click save and close. And now here you can see this, we have already created 3. Now we will just use the descriptions given here. Okay, we will write we will just give the date, just give the date on 1st February 2024, and the cost price is 3500. If you want to select the vendor pay, that the preferred vendor pay, you can write it. You can write the assets information here, location, everything you want to write. You can record it here, the detail of a fixed assets. And now we move forward. We click on OK. Okay, it's giving a purchase descriptions. Purchase asset. Okay, we click on OK, and now you can see this, that it is the amount is created here, and you able to see this. We have just created a purchase fixed assets. When you click save and close, and now you will go first see on the list options that if is the fixed assets we just recorded is correct or not. So when you click on the fixed assets item list, here you will see. Okay, so it means that we have just created a fixed assets of HP laptops, and we recorded correctly. Okay, so now what this account will go up there. So we are going to see the chart of accounts. Here on chart of accounts you will see that HP laptops cost HP laptops price is 3500 and cost price is 30. So we haven't created the depreciation. What is the depreciation? I am just going to tell you in few minutes. Okay, so now what else has happened? You will see on the trial balance, you will see all the trial balance that two assets is comes up here. Okay, the 3500 of this, the $3500 fixed assets has been generated here. Okay, so now what else, where it goes to the effect, it will goes to the effect to the balance sheet. Okay, here first you will see that on the cash flow. First here you can see on the cash flow the 3500 on investing activity. As I already told you, the purchase of fixed assets and the sale of fixed assets will be recorded automatically here. So you can see that the cost price of the HP laptops is recorded here. Now you will see on, let's see whether we are correct, whether there is something comes up in the P&L or not. It will not come under the P&L. Okay, so now the next is come on the balance sheet date. What happens on the balance sheet? Okay, now again you will see on the balance sheet, I will select this all, and on the fixed assets you will see that the cost price of the HP laptops comes of 3500. Okay, so this is how the second way of recording a fixed assets while we purchase it. So now we move forward, and our next topic is, what is going to be a next topic is the depreciation. Okay, the depreciation. So it comes as, what is depreciation? Depreciation is the amount that should be allocated on a systematic basis over the asset's useful life. Okay, the residual value and the useful life of an asset should be reviewed at least at each financial year. It means that a certain percentage of amount over the asset's useful life is going to be deducted from the assets, we known as its depreciation. Okay, so depreciation begins when the asset is valuable for use and continues until the asset is recognized. Okay, even if it is ideal. It means that I'm just going to explain you what is the depreciation. Okay, the depreciation method, there are various three depreciation that I'm going to tell you. Okay, so the depreciation is like, if you purchase a building, okay, but it is not given as rented, you are not using for official purpose, nothing, the building is locked in and it is remain ideal. It doesn't mean that it will not it is not for use, it is for use, but you are not using, but the depreciation amount is always deducted. So the value of that asset is deducted because of use. So it is compulsory in every standards and every law to give the depreciation. Okay, so there are many depreciation methods are followed, like straight line method. What is it is the method of straight line, that the depreciation is provided at fixed amount. Suppose we have a cost of assets of $3500 as we have created. Suppose it is having a salvage value of 200, so it will be divided by 5. It will take a useful life of 5 years. So if we go for the month, it will give you a $55 per month. We have another method, that is diminishing balance method. This method is that your value is decreasing by percentage of, that means that 35 it is not a fix, it is fluctuating and recurring. It change regularly. Okay, so the next depreciation will come is the double declining method. So we have seen diminishing method is a single, and it is here the double declining. So this is doing by this formula, like the depreciation rate will be given like 100% divided by the life of assets. Suppose life of assets is 5 and it 2 is, and it will give you the rate of this. Okay, so the depreciation value is deducted. So now we will follow the straight line method for better understanding. Okay, so how will depreciation is recorded in the application? Okay, so the first thing is that we should there is two ways. So depreciation in the application can be recorded by way of chart of accounts of concerned account or by making general entry. So it is done by the two method. Okay, the first method, before I am just going to tell you the first method, we should create a depreciation account. Okay, I don't think so we have just created a depreciation expenses account. Okay, we will create depreciation expenses account. We click here, we write the expense account as it is an expenses, so we give the account number 46,027 and the expense amount is depreciation expense. We'll click save and close. So the depreciation expenses account is been created. So okay, so now the first way of giving a depreciation in the QuickBooks application, the first is that we go to the chart of accounts and we select the accumulated depreciation. Okay, and we double click on the accumulated depreciation account. We change the date. Okay, we change the date. It is on 29th February the depreciation. So it is a non-cash transactions, so we are not going to give the name of the payee. Okay, the name of the payee, we are not going to give the name of the payee. We just give the depreciation expenses account and it is decreasing, so just give the amount is and you will give the memo sorry, we have buyed on the 1st Feb, so the depreciation will be on 29th Feb. Okay, give the depreciation for the month of Feb 2024 and we will record it, and we click, and now here we will see that the HP laptop amount is decreases by 3,445. The depreciation is gone to $55. Okay, so this is the first method. Now the second method, what is the second method? Okay, now the second method is by making a general entry. Okay, from the main menu on the company options, you will create a make general entries. Okay, now here you will see. Okay, so how you will create this? So now on 31st March we will go to debit the we will select the depreciation account, depreciation expenses account, that is debited by $55, and we will give the memo to depreciation for the month of March. Okay, and here on the opposite direction is that we have to select this. Okay, and it is a recurring expenses. We have to give the memorization of this entry. Okay, we click on here, we just select this and we click this monthly. Next date is going to be a 31st May of 2024, of course. No, not 31st, 30th April. 30th April. We will give the remaining, the number of remaining we will give, like the number of remaining you should give the 30 days, and number of advance to enter we should give this, and we click on OK. Session. Okay, click on OK. So this entry will be automatically done before the 2 days of ending the month. Okay, so now we just created this and we click save and close. Okay, and you can see this, the depreciation amount is gone to $110, and the fixed assets amount is decreased to $3,390. Okay, so now we move for the next topic, and our next topic is selling of fixed assets. Okay, before I am going to move forward, when we just sell the fixed assets after a certain amount of days, we will sell at book value. It can be sold at book value. It means that we are not getting any profit or we are not getting any loss, and sometimes we sell out at gain, or and sometimes we will getting a loss. Okay, so before moving this, you can see this here the depreciation is charged to $110. When you click on your trial balance, on the trial balance you will see that accumulated depreciation amount is gone to $110. But what other thing you will see, that the laptop cost price is not changed. Why it is not changed? Because it will not change here, it will change on the financial statements like balance sheet, profit and loss account, and the cash flow. The particular amount is posted automatically on those account. Okay, so now this is how your depreciation expense, here you can see the depreciation expenses is here as well. Okay, so now when you go and see the reports, first we will see the profit and loss standard report. Okay, here you will see the report, and you will see the expenses of depreciation expenses to $110. It is an expenses, I told you, we have just mentioned that type $110. so $110 is come up here. Okay, and what other report I am going to show you, that on the reports again, on the balance sheet standard, creating all, and you will see on the fixed assets the fixed assets amount. You will see the fixed assets net amount is $3,390. Why? Because of the depreciation we have just given there. Okay, because of this the amount is deducted, and amount is netted. And what other account is? The other is a cash flow statement. Here on the cash flow statement you will see the depreciation is 3,500 less, and it will come up $110. So okay, so this is how it will adjusted here. And you will ask why it is not coming on the operating activities, because it will not come to the operating activities. Okay, so this is come up here, it's like this. So now we move forward and we sell a fixed assets. Okay, and all these selling of fixed assets will be done through making general entries. Okay, just remember it will go to the general entries. So now first we go and see on the chart of accounts. So the first topic is selling of fixed assets at book value. That means that no profit and loss. We will see the amount is 33,390. Okay, we will just make a journal entry. We click here, making a journal entry. Okay, we will select the date. We will select the date on 1st April we are selling. Okay, we write the account name, it is coming into our bank account of this. We will give 3390. Okay, and give a memo. And so we have to pull this amount to the depreciation. So we will just write the accumulated depreciation again here and give 110. Okay, and the next is, of course, we will give the cost price. And when we click save and close, when we click save and close, you will see that the fixed assets and laptop is become 0, and on the reporting P&L you will see the depreciation is remain there. Okay, no, sorry, on the balance sheet, you will see the fixed assets amount is gone to 0, and there is no, and on the cash flow report as well you will able to see this. So there is, when you sell at book value, there is no profit and loss, and all the balance of the fixed assets of that particular fixed assets becomes nil. Okay, when we close all this information, and we will delete the entry, and we'll check that all the available things will come up here. First we'll see trial balance. Here you see on the trial balance it will become 0. So now we will go on the general entry. And we just give the last entry. And we delete this entry. Okay, and now let's see that the balance is come up here or not. The balance is come up here. Now what happens the next? Now we are selling this fixed assets at a gain thing. Okay, so now how will it show you a gain? So now go again from the first we will see on the reports again. We'll see on the balance sheet, if the balance sheet amount is corrected, so it means that it will come up here. Okay, so now we will go on the fixed assets sale at gain. Okay, so now here we will go again on the making journal entries. We select a date of 1st April. We will write that we are receiving this amount. So now suppose the laptop is selling on $4,000. Okay, and again we have to create the accumulated depreciation again above of $110. Now the cost price is we have to write the cost price is 3,500. Now the difference between this amount and this amount is a profit, is a gain. So of course the gain is not a regular income. Okay, it happens mostly rare. So when we have to create a new account, and we will just go to another account type and create other income, and we shall continue this. Okay, sorry, I have to see the list of account again. So we have to create a new account. Okay, again on other account type, other income. So this is, it is a other income, and we create other income, and we will give the name gain from sale, and we click save and close. And we click save and close, and we will see this. Okay, so now again on the first we will go on the fixed on the chart of accounts. On the chart of accounts we will see that there is no price come up here, but on the gain from sale you will see this has come up. And let's see on the trial balance what happens of financial statements. So here HP accumulated depreciation becomes 0. Okay, and gain from sale amount will come up here of $610. Okay, and now what happened next? The next is happened on the reports. Again on the profit and loss account standard, you will see here, you will see the depreciation expenses is there is a, and the other income comes up of $610. Okay, so it will be posted automatically here. What happens on a balance sheet? On the balance sheet, it will happen on the balance sheet report. You will see that the fixed assets of laptop is gone. Okay, but the depreciation expense is not there also as well, but the net effect of the profit will come up like here. So there is no value on the balance sheet date. Now the most important thing is you are going to see that what happens on the cash flow, what report, what it is going to be disclosed there. Okay, so now we will go and see on the cash flow as well. When you click on the cash flow and we select all, here you will see that nothing will come up here. Why it is not come up here? Because it is sold it all the way. As we all know that the investment activity is giving a sale, so it will be debited, and there is no effect in the financial statements. Now what happens when we sell at lost? How we can record it? Again on the company, make general entries, find the general entry, let's find the general entry number 14. We delete this. Okay, now we again create a new general entry. Okay, now we are going to sell. So now we are going to say on the loss, suppose we are getting this amount of 3000, again selling a fixed assets. Of course accumulated depreciation will come up here on 110. Now what happened here? We are going cost price of 3500. So now you can see the loss of $390. How it will be recorded here? $390 record. So we just create this again, add a new, and it is an other expenses, and we can give this the name loss from sale. Any name you want to give, you can give it. And when you click save and close, and save and close here again, first you will see on the list option fixed assets item list. Now first you will see on the chart of accounts, you will see that all the amount is gone zero, and you will go and see the next on trial balance. Here you will see that 390 loss from sale comes up here, and the amount of HP laptops, and it will become zero because of the sale of the fixed assets. And of course on the company's financial profit and loss standard, you will see the loss from sale here. Okay, and again from the menu of the balance sheet is same as on the gain, and same as on the gain there is a nil of the fixed assets. And again on we are going to see on the reports again, and you will see on the statement of cash flows here all, and you will see that this effect has been done. And now what happens? Suppose just close all these reports. The most important part after selling the fixed assets, we have to go to the fixed assets item list. Here you will see there is, if you don't want to bother you will just click it here and you write the item is sold, and you click on OK. Sell date is 1st April. The amount for sold is 3000, and we click on OK. Okay, and you click on OK and become item inactive, and you click on OK. So if you want to buy the same fixed assets, you can just click on including inactive, and you just go through this and you will cross it. Okay, so in this way you can create it this fixed assets item. Okay, so now our next topic is that financing of fixed assets and loan payments, that we will do tomorrow. So this is how a fixed assets has been recorded. There is two ways to record the fixed asset: by purchasing and record it, or by recording an existing fixed assets. Okay, so we will continue fixed assets parts in the next sessions, and thank you for joining the this sessions. Thank you.